Hi, I'm Jimmy. In this video, we're going to look at my personal investment portfolio and some developments that have happened recently in those investments and my thoughts around whether or not I should sell them at this point. Okay, so let's jump into this thing. Now, many of you may know who I am already and may have even watched a video I did a few months ago where I was fortunate enough to receive the silver play button from YouTube for crossing 100,000 subscribers on this channel. But for those who haven't seen it yet, well, in that video, I walked through some of my backstory and I look at my personal investment portfolio. I looked at why I bought them and how I got to this point. Now, if you're curious to see that video, I'll leave a link to that video in the description below. But I bring that up in this video because I believe that some backstory is a bit necessary to understand how my investment portfolio is or how it got to where it is right now. So here's a 30-second rundown, and then we'll look at some of the companies that I own. So in 2018, I started my own investment research company called JWC Research. And with that company, basically what we do is we write investment research companies, mostly for hedge funds and some mutual fund companies. And that was actually the birth of this particular YouTube channel because I started creating learn to invest videos for our clients' websites so they could give it to their clients. And I described that story in a bit more detail in the My Portfolio video that I'd done a few months ago. But the reason I mentioned that in this video is that when we were getting ready to launch the company, well, basically my wife and I sat down and talked, and we agreed to close out any savings accounts we had, close out any investment accounts we had, take everything we had and invest it in our coming company. So up until early this year, that was my only investment. The only investment I've had over the past few years was JWC Research. Everything we had went into that. But early this year, I had been trying to look for an opportunity to start investing again. The very first investment I made this year was Disney. Now, we should all know ahead of time that I actually have a very strict self-imposed rule that I've mentioned in some previous videos, and that is that I will not buy a stock unless I first make a video about that stock. I think that's very important because I believe that it's morally the right thing to do. I am against, I think it's wrong for me to buy a stock and then do a video on it and try to drive the price up. Now, sure, in this case, I'm talking about my first buy, which was Disney. We're very unlikely to make an impact on the price of Disney stock, but still the concept remains the same. Along those same lines, another aspect to that rule for me on a personal basis is that when I issue a video, I need to wait a few days just in case any people that have been listening to my suggestions or my ideas or my research or whatever it is, they have an opportunity to act first. So I've been waiting at least a few days after I publish a video before I go out and buy a stock. So if you happen to be just starting out your investment portfolio right now, I think we should all know that I'm just restarting my investment portfolio away from JWC Research, which I still have, but diversifying away from that and into more stocks that I'm talking about on this channel. Okay, so with that all laid out, and now that we're all on the same page, back on February 18th of 2020, before the coronavirus happened, before the coronavirus stock market crash happened, well, I had done an analysis of Disney stock where I reviewed their business. And in that video, I talked about the launching of Disney Plus, and ultimately we did a discounted free cash flow calculation for Disney stock, and we came up with a fair value for Disney stock of about $102 per share. Now, this is what Disney's stock chart looked like on the day that I released that video. So we calculated a fair value of Disney stock of $102 per share. But at that time, this Disney stock was trading at almost $140 per share. So clearly, this thing was a far ways away from it looking like a good buy. Now, in that video, I did come out and say that I really liked the business. I thought it was a great buy, but I wanted to see it ideally drop below our fair value calculation. But then, as most of us know, when we fast forward this chart, well, there was this huge crash in the stock market, and Disney's stock was part of that. Their parks were shutting down, movie theaters were shutting down, and the stock tanked because of it. Now, I really wanted to buy Disney stock. At that time, Disney was at the top of my bullpen. Basically, it's a watch list of companies that I really want to buy. And on that list, I have the company that I'm interested in, why I like it, and at what price I wanted to buy it. For me, I had said that I wanted to buy Disney below $100 per share. I'd calculated the fair value to be $102 per share, and personally, I had a ton of confidence in their long-term business. So I ended up buying some shares of Disney right in this area, and again, a few weeks later, right in this area. Now, my average entry price for my shares as of today for Disney is $99.86. Now, that's not a bad buy, but considering Disney stock dropped below $90, I wish I had waited just a little bit longer, but frankly, as soon as it dropped below 100, I was super excited and I was all over it. Now, I don't regret it too bad because Disney has done quite well. Fast forward to today, and we can see that Disney stock has really skyrocketed. In fact, I think it's done better than I would have expected. It's certainly done better than I would have expected. I think it's done way better than it should have done. So I bought the shares down here. Now it's up near about $173 per share. So that's about a 73% total gain for my investment in about a year, a bit short of a year. So now this begs the question, should we sell Disney stock right here? And for me, it's very unlikely that I plan on selling Disney stock anytime for a long time. I plan on holding this for a long-term investment. This has always been intended to be a long-term investment for me. Big picture, I'm a big fan of Disney, at least from a business perspective. Now, I wouldn't be surprised if Disney stock over the near term, over the next few months, whatever it might be, maybe it does drop down below where it's at, 173 now. Maybe it goes down to 140 or 150. I'd be surprised if it went back below 100 again, but if it does, I would be happy to jump in and buy some more. Now, I'm actually updating my research on Disney over the next few days. I have been doing it for the past few days, and I'm going to release an updated video on Disney stock in about a week or so, probably a little less than a week. But basically, they had an investor day not too long ago, so I've been going through that, going through their quarterly filings, and I'll be issuing that video in the not too distant future. But for now, I'm more than happy to just sit on my stock and hold it for what I believe is going to be the very long term. Okay, now on to my next and final holding. And this one, it's a slightly different investment than Disney is. And the next holding is Intel. And I'm not quite as confident in Intel as I am in Disney, but basically, here's what happened. Back in July of 2020, I released a video on Intel. This is what their stock chart looked like at that time. Now, by this time, I already own my shares of Disney, and I was looking for another investment. Although I don't have a ton of cash to invest at this point with the company and all of that stuff. So basically what I do is when I get a little bit of cash and I'm able to invest, I put it all into a single position, and I plan on diversifying by continuing to add individual investments in different companies as I find them and as the timing looks good. So don't worry, I plan on gradually adding more and more positions until I get to a fully diversified portfolio. Yes, I agree that just 2 stocks are way under diversified, but I would rather do that than not be investing at all. So on that Intel video, well, that's what the stock chart looked like. And this was coming off of news that their 10 nanometer chips were going to be delayed. They were having manufacturing issues, and Wall Street and investors clearly didn't like that, and the stock pulled back. Well, I do my calculation of fair value in that video, and basically I came up with a fair value for Intel stock of $92 per share. And yes, I know that their 10 nanometer chip being delayed was a bad thing, and I agree that that is a bad thing. Intel certainly has some issues that they have to sort out. But I was banking on the fact that they are a very large company. They have tons of revenue, tons of free cash flow, and they have an opportunity to try to improve their business. Unlike a company like Disney, which I am way more confident in what they're doing. They seem to be making good decisions and pulling the right levers at the right time. But Intel, on the other hand, has had more trouble with it recently. Now, the advantage of this stock at that time, on the day that I had done the video, was that there was such an enormous upside between where I was calculating the fair value to be and where the current stock was. So when we fast forward this to the past year, well, at this time, after the video was released, I waited the appropriate amount of time before I jumped in and buy it, and I bought some shares right in this area, and then more shares in this area. Now, I actually had more money when the stock dropped below $45 a share, so my average price is $45.65. And as of Friday, the most recent close on Friday, the stock was $47.46, I believe. And at that, with those numbers, I'm up about 3 or 4%. Although I wouldn't be surprised to see it drop more this week, because I know they just had some bad news came out. Microsoft isn't going to use their chips anymore, or they're going to build their own chips, something along those lines. So that's likely to hurt their stock price, at least in the near term. And I'm going to go ahead and update my research on Intel and put out a video on that stock as well. I'm going to try to do that in the very near future. Although I am less confident in Intel than I am in Disney from a business perspective, I do believe that Intel has a long-term opportunity and they have the capacity to turn around their business. And if they do, well, the upside could be quite large if they can get anywhere back to our calculation of fair value. Now, it's also possible that they just linger here for a long, long time and it ends up being wasted money. But again, the upside is so potentially large that it's a risk I'm willing to take. Now, at this point, I am very much actively looking for other investments to help diversify away from this risk. But in the meantime, I continue to hold Intel stock, and I have no intention of selling Intel stock anytime in the near future. I'm very hopeful that they begin to turn their business around, begin to deliver on the products that they claim to be working on, and I'm hoping that helps turn their stock around. But in the meantime, I'm willing to just sit and wait. Now, I actually did a video called When to Buy a Stock, where I talk about how far below our calculation of fair value is a good place to consider buying a stock. It all depends on our confidence in the company in general, hence the difference between Intel and Disney. So if you're curious, perhaps that could be a good next video for you to watch. I got a link right here, I got a link in the description below. And thank you so much for sticking with me all the way to the end of the video. I really appreciate it. Thanks, and I'll see you in the next video.